On the open of the markets on March 9, 2020, market volatility and dismal futures resulted in a potential flash crash, which resulted in circuit breakers being triggered, halting the markets and stopping a potential meltdown. With the recent stock market volatility due to the coronavirus scare, as well as oil price declines, opportunities have opened up for greatly undervalued stocks. At this point, even top valued and growth stocks have significantly reduced in value. Using the principles of value investing as well as dollar cost averaging can be hugely advantageous during times like this. In this video, I will discuss 5 top stocks you can invest in today which have been massively undervalued and present great opportunities for huge appreciation over a short period of time. Get ready, you are now entering the Academy. Early on, when the coronavirus broke out in the news, markets didn't care. When it was just a Chinese issue, US stocks stayed in rally mode on the idea that it was a problem that would stay locally in China and its borders. From January 1st to February 19, the S&P 500 rose more than 5%. Then coronavirus went global. US stocks started carrying in a big way. From its mid-February highs, the S&P 500 has shed 18%, a drop which included the index's worst weekly and daily performances since the financial crisis in 2009. Is this really the end of the world? No. What happens next? Some choppiness and then a sharp rebound in US stocks. The coronavirus is now a pandemic, and like all major modern pandemics, this too shall pass, and relatively soon. Warmer weather, which tends to kill influenza-type outbreaks like this, will couple with strict quarantining and wider distribution of potential treatments to ultimately put this outbreak to bed within the next few months. Thus, both common sense and data support the claim that come April or May 2020, the coronavirus outbreak will most likely be largely dead, and eventually this sell-off will cease. Stocks will rebound on a fresh round of central bank stimulus and easing global trade tensions. The key here is to buy strong, high-quality US stocks on this temporary weakness. It is sometimes difficult to ignore the noise that is going on, but buying strong US stocks which have been unfairly beaten can be the remedy for this economic downturn to further strengthen your portfolio into your own economic powerhouse. If you watched my previous video titled 3 Stocks to Invest in for March 2020, you can take advantage of undervalued dividend stocks that have been severely depressed and create a powerful portfolio with the stocks that will be mentioned in this video to capture on multiple income opportunities, which is the focus of the wealth creation system. And now we will go into the 5 stocks to buy now to realize capital gains for the rest of the 2020 year and beyond. The first stock is Apple, ticker symbol APPL. Apple has been hit hard from multiple angles thanks to the coronavirus outbreak in China. First, the company closed all corporate offices, stores, and contact centers in mainland China. Second, many of Apple's suppliers in China have been ordered to reduce or altogether halt the production. Third, Apple's AirPods may have a supply shortage for the next few weeks. Fourth, there are concerns that iPhone production will now be behind schedule. None of that is great news, especially since China is a big part of the Apple growth narrative. But Apple will be just fine. This is true for a few reasons. First, the Apple Store will get a big boost during the outbreak. Consumers globally will increasingly stay home and spend more money on mobile apps and games. Second, February typically isn't a big month for iPhone sales. Third, because an iPhone is a big-ticket purchase, any lost demand during February won't forever disappear. It will just shift into March or April. Fourth, Apple's big iPhone launch comes in the back half of 2020. By then, the outbreak should be old news. It's also worth noting that Apple is reopening its stores in China because it appears that the worst of the outbreak is over. That's a huge positive for this company heading into the second quarter. All in all, Apple will weather the coronavirus storm just fine, and the company is still staring at huge growth potential in the back half of the year. Apple presents a great opportunity to enter here at this weakness. The second stock is Amazon, ticker symbol AMZN. Alongside the rest of the market, shares of e-commerce juggernaut Amazon have fallen off a cliff in February on coronavirus fears. Has anything about Amazon changed because of the coronavirus outbreak? The short answer is no. The e-commerce business continues to capitalize on a shift towards online shopping, and the cloud business continues to dominate the enterprise cloud infrastructure market. The ad business has tremendous upward momentum. Moreover, revenues and profits are running higher at an impressive pace, and there's no sign that this will slow down anytime soon. Will the coronavirus affect bottom line figures for Amazon? For a quarter or two, maybe yes. Maybe consumers shop less, or maybe enterprises spend less on their cloud migrations, and maybe merchants stop advertising as much on Amazon. But all of those impacts will be short-lived, because come April or May, warmer weather coupled with strict quarantining, swift government responses, and a potential vaccine will ultimately kill this outbreak. In turn, Amazon will promptly get back to firing on all cylinders. So big picture, don't let near-term headwinds scare you out of a long-term winner like Amazon. The next stock is Microsoft, ticker symbol MSFT. Cloud technology giant Microsoft has tumbled over the past few trading days on concerns that the rapidly spreading outbreak of coronavirus will kill demand for the company's cloud computing products. Is this realistic? The short answer is no. Nothing about this outbreak says the demand for cloud computing products will drop anytime soon. The outbreak isn't large enough in most countries to derail the enterprise cloud transformation. And where the outbreak was big enough to do that, i.e. China, it is dying down to the point where cloud computing demand should be ramping up soon. With a minimal impact projected on first quarter numbers, come second quarter and beyond, Microsoft numbers should bounce back stronger than ever. Any and all near-term weakness in Microsoft should be a golden buying opportunity into a company which, thanks to cloud computing tailwinds, is set to be a winner for the next decade and beyond. The next stock is Netflix, ticker symbol NFLX. Streaming giant Netflix has been pretty resilient during the coronavirus sell-off. Shares are only down 13% from their 52 weeks high. But this relative strength doesn't mean you shouldn't buy the dip in Netflix stock. Instead, any weakness in Netflix here is worth buying with both hands. The company has very little exposure to the coronavirus. It doesn't have any operations in China, and the more consumers stay home out of fear of catching the virus, the more likely they are to subscribe to and watch Netflix. So if anything, the coronavirus should be a net positive for Netflix. At the same time, the company is firing on all cylinders right now. Netflix is shrugging off competition concerns which plagued the stock in 2019. They will continue to shrug off those competition concerns for the rest of the year as more and more subscribers are attracted to Netflix's unparalleled content portfolio and low prices. As they do, Netflix stock will break out to new highs. So if Netflix stocks starts to show any weakness as a result of the coronavirus outbreak, that weakness is nothing more than an opportunity to buy the dip in a stock that's ready to move much higher in the near-term future. The next stock is Nike, ticker symbol NKE. Shares of global athletic apparel giant Nike have been pummeled on concerns that the coronavirus outbreak will materially impact the company's operations in China and across the globe. Those concerns were confirmed in early February when management said in a press release that they expect the outbreak to have a material impact on operations in China. Since then, the outbreak in China has gotten better, but in the rest of the world, the situation has gotten worse. As such, Nike stock remained under coronavirus selling pressure, but this pressure won't last much longer. As noted, the situation in China is vastly improving. Consumers are gradually getting back into the swing of things. Come May to June, consumers will be back at full strength. The Nike store sales will be on an upswing once again as people begin to live their lives in a normal fashion. Things will rebound in just a month or two. Thus, by June 2020, consumers around the globe will be back at full strength and Nike stores everywhere will be jam-packed again. It also helps that central banks everywhere have lowered rates to create more favorable spending conditions for consumers, adding less cost pressure on Nike. Thus, once the outbreak ends, Nike's business will get back to firing on all cylinders and Nike stock will rebound. By employing simple strategies emphasized in the videos of this channel, which include value investing, dollar cost averaging, and dividend reinvestment, you can create a low-risk growth income flow that will appreciate over time and continue to pay income continuously through capital gains and or dividend income. In this video, I provided 5 stocks that are greatly underappreciated as of March 2020 due to external events that in a short period of time will be diminished. These stocks can be added to any savvy investor's portfolio, providing great returns in a relatively short period of time due to their undervalued nature. If you'd like to pick up some of these stocks now, make sure to use the M1 Finance stock trading app, which provides a great vehicle to purchase stocks commission-free, thus providing a great way to create and grow a stock income portfolio using the methods mentioned previously. Be sure to check out the links in the description to get started on creating your very own passive income producing asset and start your path toward financial independence. Thank you for watching this video. If you enjoyed this video, don't forget to smash the like button. It will really help out the YouTube algorithm in bringing you more passive income and wealth creation strategy videos. And if you haven't done so already, be sure to subscribe to the 10X Academy. And don't forget to turn on the notification bell to be alerted on more passive income strategy videos. This is the 10X Academy.